Risk management is an aspect of trading that we can't talk enough of. We're going to look at risk management properly for what it is, and I'm going to start from basics. So quickly, without wasting time, let's get on it. Today, we'll be looking at risk management. Risk management in trading. This is one subject that we can't say enough. Now, there are three aspects we're going to look at, similar to what I did with the basic classes today. Number one, you look at your lot size. To look at your lot size. Number two, you have to look at your stop loss. Number three, very fundamental, you have to look at your leverage. What's your leverage? Four, you have to look at your take profit. You are trading and you want to take a take profit of 200 pips on a daily trade. You are surely on a long term. So those are basic things we will look at before you can arrive at the proper risk management. Now, another thing again very crucial is your account size. Your account size, or we can call it your bank. Your bank, you look at your account size. These are things we're going to look at. Sure, I'm very audible. Everyone can hear me loud and clear. So I'm going to start. Excuse me. So I'm going to start with the first one, lot size. Now, here is what stop loss is. The standard lot size is recommended for a 100K trading account. 100K, I mean by $100,000 account. What is recommended here is one standard lot size. We have one standard lot size. That's what is recommended. But these days, you hear every manner of thing. Some people will tell you for a $10,000 account, use standard lot size. You can literally use anything. That's the truth. But the recommendation is on a 100,000 trading account, use one standard lot size. Now, the downside of this is that it will not make you much money. It make less money for you. That's because your risk is really small. You get that your risk is really small, so you're not going to make a lot of money typically like you're trading on a $10,000 account. But if you're trading with an account of say 10,000, 10K, so I'm going to use 10K dollar. You're expected to use 0.1 lot size. This is the recommendation. And if you're using 1K trading account, you're supposed to use 0.01. Please, who among us here actually obey this? If you obey this rule, please let me know your chat box. If this is how you trade, let me know your chat box. On your $1,000 account, you're using 0.01. That's you. Put it on the chat box. On your 1K trading account, you're using 0.01. 1. This is the standard. Now you can begin to swap these things and begin to justify yourself anyhow. That's fine, but this is the standard. This is the recommended standard. Now you can increase it or you can further reduce it. It's your choice. Now, the way it's configured now, if you configure your trading account this way, the chances of losing that trading account is so small. The chances of making so much money is reduced. Remember, as your risk increase, you can make more money and then you can lose more money as well. It's a garbage in, garbage out. You can't always be correct always. So if your risk is high, those times you're not correct, you lose heavily. Now, for people who are trading with smaller account, I know you're already asking me, if I'm trading with a smaller account, so where do I belong? Since 0.01 is the smallest lot size, and I'm trading with 0.01, how do I trade to ensure I can still trade? Because there's nothing like 0.001. That's where you should be. The smaller lot size is this. Now, broadly, lot size is categorized. It's categorized into 3 classes. I think we dealt with this very exhaustively yesterday, where you have the micro lot size, and is a range. It's a range from 0.01 to 0.09. The mini lot size is from 0.1 to 0.9. And finally, the standard lot size. Standard lot size starts from 1 upward. So this is the standard lot size. Now, that's exactly what you saw I captured here. Now, if you try to push for a higher risk, maybe I'll start recommending for, of course, you can't do anything less than 0.01, but I'm going to start from $500. So from $500, you can use 0.01 lots, but do not exceed 0.02. That would be my recommendation. Now, if you have $1,000, I'll recommend from 0.02, but don't exceed 0.05. Now, if you're using 10K, I would recommend 0.1 to 0.5. But I think 0.5 is high already. So for me, trading 10K, I wouldn't use more than 0.2 for a 10K account. Yes, for a 10K account, I won't use more than 0.2. So, but this would be my recommendation. So remember, these are what? Recommendations. So these are recommendations. You can take them, you can throw them in, but this is standard. This is the standard practice that institutional traders use. This is how institutional traders trade. And guess what? As your account begins to increase, as your account grow or increases, your risk should reduce. You get that? As your account begins to increase, let your risk begin to reduce, and your risk starts with your lot size. So guys, I think we've exhausted the subject of lot size here. Now here's stop loss. For stop loss, here is how I usually recommend for stop loss. That's my recommendation for my stop loss. For stop loss, I'm going to, here is how I recommend stop loss. Now, if I'm entering trade here, if I'm entering a trade here, my stop loss should be below the support. So this is where I would recommend a stop loss to be placed. Now, if I'm entering here, if this is where my EP is, my entry price, my stop loss should be below here. Now, why am I'm saying my stop loss is just going to be from this point to here. Sometimes it could be big, but again, depending the time frame you're setting it, it could still be small. So I'm saying I'm using this to protect my trade. Why this is going to be my take profit all the way, my take profit. So sometimes you could have small take profit, but if you have small take profit, I recommend you use a certain pips. Some people set pips. Okay, I'm using 10 pips for my stop loss, and my TP is 20 pips or 30 pips. Or I'm using 50 pips for my stop loss. Doesn't matter where I enter the trade, 50 pips, my take profit is between 10 to 100 pips. Now, if this works for you, check it on your strategy, backtest the strategy to be sure that this is profitable. Once you've backtested your strategy and you're sure that this is profitable, please apply your stop loss every time. You know, a lot of person will start trading, and after a while they get used to say, my set stop loss not me, so I'm trading without stop loss. So they start trading without stop loss. When you start trading without stop loss, you think stop loss is limiting you. SL, you think is limiting you, then it will cost your account. It will cost you your account someday. If you're a witness, let me know. You will enjoy the ride, make money as you can, but one day it will cost you your account. So if you're sure you don't want to lose your account, learn to fix your stop loss at the right place. Me personally, I like to put it below my support when I'm buying and above my resistance when I'm selling. Same way, if this is my sell, I'm going to put my stop loss. So if I enter the trade here for a sell, my stop loss is going to be here. If I enter the trade here for a sell here, my stop loss is going to be above this high. So usually above the next high. This is high. This is lower high, sorry. And this is another lower high. This is another lower high. This is the lower low. This is the lower low. This is the lower low. This is another lower high. So usually, if I'm buying from this, so if I'm selling from this point, my stop is here. So my take profit can be anywhere here. So depending on the time frame you'll be able to find this. You can always identify this lower high and higher low and high. Once, in fact, before you start trading, if you can't identify it, you don't have a business with trading. So that's that. For stop loss, for take profit, please ensure you're taking a realistic take profit. Now, look at this. If you see this now, you already know that this is an uptrend. And then here, I decide to do a sell here. This sell is supposed to be a short sell. And guess what? I am putting my stop, my TP here. Please, my question, how? You know, it will definitely follow this trend. So price will go up, bounce on this trend and continue, bounce on this trend and continue. But I have come to put my stop loss, my take profit here. So when this trade bounces here, guess what? It goes up again. I refuse to take, this is what I call I refuse to take profits. Because you sincerely refuse to take profit. And guess what? It's going against, the more you wait, you see that your losses are beginning to increase. As long as it's following this trend, except this trend breaks and eventually come down. I don't know how much you're trading that will sustain this. So again, you must learn how to set proper take profits. Now, if I see that this is a trade, if I must take this trade, then my take profit shouldn't exceed this spot. Of course, you would have seen this on your chart. So my take profit will just be maybe around here. So as soon as price make the first move, I would have exited with my take profit and then target another buy from here, or better still, start looking for another opportunity. So again, learn to set a realistic take profits. Don't go and set take profit that you know you can achieve. It's critical. Now, if you're a day trader, learn to set take profit within range. Some people just do 10 pips. They get into this trade, their target is 10 pips. Once it does 10 pips, they exit, look for another trade. So in a day, they can find 3, 4, 5 positions where they will do 10 pips. They do 10 pips on 3 trades and they win there. They've already made 30 pips for the day. They move on. Why some other person want to make the 10 pips on one particular trade? Your choice. But let this be part of your trading strategy and your trading plan. So, great. We move on. So we've discussed lot size, we've discussed stop loss, we've discussed take profit. So we'll discuss leverage. So guys, like I said earlier, here is a raw chart. This is chart. So basically, with the stop loss, number one, how do I set the right stop loss? So I open a position. Here is AUD USD. So you see, I'm using 0.5. For what account? Let's go back. Here is the account. This is 42,000 plus. I'm using 0.5. Like you see what I'm talking about? I'm not using one standard lot size. I'm using 0.5. So almost 100K for one standard lot size. This is proper risk management. Now, if you let's look at stop loss. How can I set loss? Look at this is a trend. Identify a trend here. You can see this is a downtrend. So assuming I took this trade for sell here, at this point, I want to say here, my stop loss will be at the next high, which is here. Now, if I took the trade, say here, I took it from this point, my stop loss will be here, above here. I said always above here. And look at it. If I took it here, maybe I took the trade from this rejection here, and price came back again. Guess what? See, it didn't hit my stop loss. And the trade will gently go down and hit my TP. Maybe this is my TP. I hit my TP. If I'm taking from here, my stop is going to be above this high. Now look at it. Price didn't get back to this high. Now, if I'm taking the trade from here, this is for sale. I'm using this to demonstrate for sell. I'm going to put my stop above this here. Now, price didn't come near this. Now, sometimes price can just come and hit and continue. But I'm going to show you one now. Look at this here. Assuming I took the trade here and I put my stop above here like this. Look at it. Price came back, hit. So it would have closed me out in stop loss. But guess what? Gave me opportunity went up, came down, gave me opportunity to enter for buy. So I probably would have entered for buy, and guess what? I would have recovered whatever this stop loss from, instead of trying to carry over, because the trend invariably has changed. You can see that the direction has changed. There's a break of structure here, and market has changed direction. So, guys, this is what we're talking about: setting the stop loss properly and then using the right lot size. Now, if I go edge sword, like you can't trade without leverage. That's the truth. And then with over leverage, you can't resist the temptation of over trading and revenge trading. Those are the two enemies of over leverage. Now, beside that, using the right leverage is recommended for proper trading. Now, here are my recommendation: 1:50 if you're using an account of 1,000 and above. And if your account is less than 1,000, I would recommend 1:100. After all, in Europe and in the UK, leverage, the highest leverage you have is 1:30. So you're still way off. You're still better. Even with your $100, you should be able to make some money for yourself. So let's quickly see how we can configure leverage on the MT4. And like I said before, if this is your account and you're setting up a leverage, by default you already see it's 1:1,000. What this means is that for every 1,000, for every $1 you bring to this trading, the broker will match it with 1,000 times. That's what it means, and that will allow you to take more risk. So what you do is to reduce this, change it to 1:50 or 1:100, depending your bank size. If you have up to $1,000 and above, use 1:50. That's my recommendation. But if you have less than, use 1:100. So I choose 1:100, and you can scroll down. Of course, you can select whether MT4, MT5, and guess what? You open your account. As simple as ABC.